Good afternoon, everybody, and thanks very much for joining our webinar today, all about the R&D tax changes that are coming into effect in April 2023. So just a couple of introductions. I'm Adam Morris, one of the directors of Fusion, and I'm joined today by Venetia, who's our head of accountancy.
Hey, everyone.
Brilliant. We're just going to wait for a couple more people who I can see are joining. So we'll just give it 1 second. Okay, I think we can see everybody in there now. Brilliant. Okay, so let's get started. Okay, so introductions again for the people who've just joined. So I'm Adam Morris, one of the directors of Fusion, and I'm joined today by Venetia Benjamin, who's our head of accountancy at Fusion Accountancy.
Hey, everyone. Just if you have any queries throughout the webinar, feel free to put them in the chat box and we can answer them at the end or as we're going along.
Brilliant. Good. Okay, so today's webinar agenda, we're going to be discussing what R&D tax credits are. We're going to work out who is eligible for R&D tax credits, but mainly we want to focus on the upcoming changes that are due to take place in April 2023. We actually did a webinar about this a few months ago, but the legislation was still in draft, but now it's all been confirmed. We're going to just let you know what changes are expected, or what changes are definitely happening now it's all confirmed, for April 2023. And then lastly, just touch on how we approach R&D tax credits, and then we're going to leave some time at the end for Q&A. So as Venetia said, if you've got any questions, just stick them in the chat on the right-hand side, and then we'll pick those up at the end and answer any questions that anybody's got. Okay, so very briefly, just a little bit about Fusion. So we are a professional services consultancy group. That means that we touch all areas of professional services, including tax, accounting, financial services, digital marketing, consulting, and international services, and obviously accountancy, which is what we're talking about today. We've been established for 7 years, and we employ approximately 35 staff, and we predominantly work with SMEs, entrepreneurs and private clients the whole way through their business and private journey. So we have a team of all our own in-house advisors, and the unique part about what we do and what we've built is that all our in-house advisors work together, all making sure that we help and advise our clients on where they're trying to get to and help them across their journey. Venetia, do you want to just talk a little bit about what Fusion Accountancy does specifically? Yeah,
sure. So Fusion Accountancy, we do everything that you'd expect a typical accountancy firm to do. So year-end accounts, bookkeeping, VAT, management accounts, anything in relation to accountancy and corporate tax. But we take it one step further. So you'll see on the screen that we also do R&D, financial due diligence. We help with HMRC obligations, investigations, all of that side of it. But my team also work quite closely with clients on a more of a advisory level, whereby we look 3 to 6 months ahead and ask the client really what do they want to achieve with their business. And from that, we help clients actually achieve that with the other services within the Fusion Group.
Brilliant. Okay, let's talk about R&D.
Okay, so one of the questions that we get asked quite regularly are, what are R&D tax credits? So R&D tax credits primarily for limited companies. So unfortunately not available for LLPs or sole traders. It's essentially a government incentive which is designed to help companies that have invested in innovation. And it's quite a valuable source of cash for businesses, which can be offset or received as a refund against the corporation tax. So like it says on the slide, it can be used against, it's across any sector. So it's not just companies that employ white coat individuals, it's literally across any sector. Adam, do you have any examples of R&D claims that we have completed for, I don't know, quite innovative companies?
The one that I tend to use a lot is that we did quite a large R&D claim for a toy manufacturing company. They had a unique take on a baby high chair. So they were trying to design a baby's high chair that could be used in a very, very small kitchen environment, where typically the base has to be very, very small because they had to get it into a very small kitchen whilst ensuring that the high chair couldn't be just toppled over. So it had to be very, very strong at the base, very, very stable and secure. And they had to bring in structural engineers and God knows what to try and work out the dimensions and the weighting and all that kind of stuff to make sure that it wouldn't topple over. That's just one extreme example. We've been involved in all different types of industries, property software, hedge fund management, and everything in between. We're also involved with a vaping company and everything. Most people, I think we've got it down there, although our heads are covering it. Most people think that R&D are only for companies that employ, men and women in white coats, and that is, could not be further from the truth. We've found R&D opportunities in a wide range of different sectors, industries, and people are sometimes quite amazed with the fact that they are qualifying when maybe in the past they'd spoken to their accountant or advisor who said that they wouldn't be. So, it's definitely worth finding out if you are eligible, because otherwise you're leaving money on the table.
So as Adam mentioned, the scope of R&D is huge. We speak to a number of different clients who don't think that they're eligible, but we do ask them those simple questions on the screen there. So essentially we'd ask them, have they developed something that is outside the industry norm? So that essentially means, has the company spent any money developing new products or services that would be eligible for R&D relief? That also includes enhancing existing products that are on the market, and the product or project doesn't have to be a success to qualify for R&D tax credits. So you don't actually need to go ahead with the project to actually reclaim costs from HMRC. Likewise, have you developed any in-house software? So we work with a number of different companies whereby they've developed CRMs. I mean, this is more Adam's area in terms of IT tech, etc. But if they've developed, or if you have developed any in-house software that has helped establish your business or grow your business, that is something that could qualify for R&D. Likewise, have you created new ways to work or created new ways that will help you become more efficient? Stuff like that. So projects like that would also be R&D qualifying expenditure. Likewise, with SMEs, subcontracting work out to different subcontractors. Again, there is a cap on that, which Adam will go through in a couple more slides. But if you've subcontracted work to work on a project or create a new existing product, again, that is R&D.
Yeah, we're going to cover off the subcontracted bit because there's some changes coming in April, which may affect how that's dealt with. But yeah, we'll come on to that in a minute.
Just also bear in mind that R&D is across any sector. So it's not just the tech industry. I mean, it could be across any sector. We've worked with a number of different companies, and it's just asking yourself those simple questions.
Absolutely. Okay, so some of the key things that are changing from the 1st of April 2023, we're going to go into this in a bit more detail, but just in summary. So the good news is that HMRC are extending the costs that qualify for R&D relief, and we'll explain what that is in a minute. However, on the flip side, they're refocusing relief to UK activities. Now, that's going to be very, very, very challenging for a number of our clients because they typically outsource offshore to save cost. And, that's going to be something that's going to be restricted. And we'll come on to that in a minute. And then there are some new requirements that HMRC are enforcing from the 1st of April to try and help tackle abuse of the scheme. So for those of you who may have seen, over the last probably year or so, there's been quite a lot of investigations into kind of spurious claims that have been put forward by a number of businesses in the UK. We are very pleased to say that we have 100% success record across all of our claims, and none of them have been investigated, which is good news. However, there is definitely an increase of HMRC looking into claims that are spurious or haven't been done correctly. And so they are putting in a number of measures to make sure that those abusive claims, well, not abusive claims, you know what I mean, those spurious claims are picked up and investigated. So we'll talk a little bit about those now. So we'll flip to the next slide, please. Okay, so extending costs that qualify for R&D. So one of the key things that is very good is that from the 1st of April 2023, if you have incurred cost related to data or cloud computing, those costs can now be included in your R&D calculation. So historically, you were not able to include AWS, Azure, Google Cloud, all of those types of cloud computing services. You weren't able to claim those costs. But now, if you are doing anything relating to R&D that requires you to use any kind of cloud computing service, then those costs can now be incorporated within your R&D claim. So that's quite a big one. We've got some clients who spend, anywhere from £10,000 to £100,000 on their cloud computing charges. So that is good news. That will now be able to be included within your claim. However, what HMRC are saying in their guidance is that if, for example, only 5% of the costs are appropriately linked to R&D, then obviously you can't claim 100% of the cost. You'd only be able to include the 5%. So this is where you need someone who knows what they're doing to look at these costs and say, well, if you've got 50 staff and 5 of them are doing R&D, you can't include the cloud costs for those 45 people. So it is going to get a little bit more complicated, but the good news is that broadly, cloud computing costs and data costs will be covered. So, if, for example, you're in the software industry and you're building a piece of software that's hosted on AWS, then whilst you're going through the R&D process of the build, those cloud computing costs would now be covered. So that is good news. That is good news. The last part, I can't profess to say that I know a huge amount about pure maths. I'll hand that one over to Venetia to explain, but pure maths can now be part of R&D, although HMRC have not yet defined what pure maths is in the legislation. They're probably trying to work it out as much as we are. So
I think that's more directed at the science and technology sector in terms of algorithms, etc. But again, that shows how wide the scope of R&D is. It's not really just the tech sector, whereas the cloud and computing costs was definitely something that would enhance the tech sector's R&D claims. But I think this is more for any science sectors.
Yeah. There's also a link I've been reading about with regards to how pure maths is applied to artificial intelligence. And those of you may have seen recently, obviously, ChatGPT has now been released. So there's going to be loads and loads and loads of technology that's going to be based around those types of new systems. So those kind of things. If it's using pure maths, algorithms, machine learning, all those kind of things, the cloud computing cost of those things would now be qualifying, which is good news. Okay, so this one is a very controversial topic and something that we've been trying to get a bit further guidance from HMRC. So what we're basically saying now is that from April 23, if you outsource or you use subcontractors that are not based in the UK, then those costs will not be able to be included in your R&D claim. So where this would affect you, for example, is if you were building a piece of software and you outsource the development to a company in India or Romania or anywhere outside the UK, then those costs can now not be included in your R&D claim. Now, there are some murmurs around, some things which are going to be exempt. They haven't really provided much guidance on that yet. But what they are saying is that, an exemption will not be, it was cheaper to do it offshore. So we're still waiting for more guidance on that. But, they've said that specific R&D activity where you're subcontracting to a company that's outside the UK will not be able to be included after the 1st of April. So I'm speaking to a number of our clients at the moment about working out what that means, because some of our clients have got whole teams of people in India and, all other places. So that is a big one to bear in mind from the 1st of April. And then this one is not so much annoying for our clients, more so for us. So there's now going to be a new due diligence and filing process for R&D claims. So all claims will have to be made digitally, which is fine. We've been doing that since day one anyway. But now what is going to be a requirement is the breakdown of costs across each individual kind of sub-project that you include in the R&D. Now, actually, this is something that we've been campaigning about because we've done this all the way since the beginning. A lot of our competitors don't do this and haven't done in the past. And that has, typically led to more investigations. we include a full breakdown of costs per project. We also include all of the narrative, technical narrative, and that is, I presume, the reason why we've had a 100% success rate and no investigations. However, a lot of our competitors don't do that, and it's something that from the 1st of April they're going to need to do from a legislative point of view. So we're one step ahead of the curve there. So no change for us. We're also been told that you're now going to need to name a senior representative from the company who is basically putting their name to the claim. So again, we've been doing that since the beginning. And also, you now have to specify who your advisory agent is. So, i.e., Fusion would be, if you're doing it with us. And I think that must be HMRC wanting to know that if they get a whole heap of spurious claims, that at least they can then tie it down to one particular advisor that's doing these claims or whatever else. So it will create a lot more transparency and a lot more accountability for the firms who are recommending and doing these kind of R&D claims. So that's very important. The last one, which again is quite an important one to know, is that you now need to notify HMRC 6 months within the end of your accounting period that you are going to be doing an R&D claim. Again, they haven't quite released the information yet of how they will be notified, but you do have to notify them. Otherwise, they will not allow you to put the claim in. So again, that's something just to bear in mind. You don't want to miss the boat on that and potentially leave the claim unable to be made. So those areas are very, very, very important.
I think that last point is definitely an important one, because if you haven't claimed R&D before, and this will be the first time you're claiming R&D, you just need to be aware of that 6-month deadline of notifying HMRC, because a lot of clients are likely to miss that. And considering HMRC's current workload and current backlogs, you just want to ensure that HMRC are notified at the earliest time.
Absolutely right. It'd be interesting to know, Venetia. I don't think they've released any guidance on this yet. So if you're doing a 2-year claim, how does that work? Because obviously you would have already missed the first 6 months of the accounting period. So that's something that we'll need to get some guidance on.
Yeah.
Cool. So the next point is how we approach R&D tax credits. So I've been doing R&D for a very, very, very long time, probably around 15 years, maybe slightly less than that, 14 years.
Showing your age, Adam.
Oh, yeah, I know. So we've been doing it for a very long time, 7 years at Fusion. And our approach is now actually more in line with the way that HMRC want the whole industry to do these things. We've been, as I said, one step of the curve since we started. We've always put together a technical narrative. We've always put together a full cost schedule and continue to do that. So what will typically happen is that one of our team will have a preliminary conversation with you, understand the business, understand what could be qualifying. We'll then have a look at the costs and give you our view on whether we think it's worth putting forward a claim. And then we will agree a fixed fee quote with you, which includes all of our time, any kind of inquiries, correspondence, which is now actually insurance backed as well, which is really good for our clients. And we will take care of the whole thing from start to finish. We've worked with, as Venetia said, loads of different sectors, loads of different types of claims, all sorts, software, hardware, toys, vaping, property, every single thing. So very, very happy to speak to anyone around that. But we absolutely provide a fixed fee. Everybody knows where they stand on fees. It's very transparent, and we'll hold your hand through the whole process. At the moment, as I kind of mentioned before, HMRC will allow you to claim costs for the 2 prior accounting periods. It's going to be very interesting to see how they deal with this 6-month notification piece with that. But we speak to people literally every single day who have not made claims, and we've been able to find, sometimes hundreds of thousands of pounds worth of costs that they were eligible to claim. And as long as they've been within that 2-year period, then we're able to make a retrospective claim at the moment for those costs. So absolutely worthwhile finding out if you qualify or if you could qualify and talking to us. We've been doing this for a very long time. It's one of our specialist areas, and we'd be delighted to speak to any of you after this call just to try and give you some advice and see if there's a potential claim.
Just to add to that, because it's my team that do the financial side. So what we do is we go through the full nominal ledgers in terms of the balance sheet, so the asset side of the balance sheet and the profit and loss account. And a lot of the time what we find is that clients don't actually know that certain costs can be eligible for R&D. So we've managed to also maximise claims for a lot of clients, whereby they've been advised by other R&D specialists that this is their maximum claim, whereas we've actually elevated that claim slightly higher whilst being able to justify it through the technical report.
Yeah, that's right. That's right. That's right.
So moving on to the important bit, how will I receive my R&D tax credit? So this is something that my team work on a regular basis when we're looking at the corporation tax and CT 600 as a whole. So we can do it two ways. It's either you're an accounting client of ours and we complete the year end and the corporation tax at the same time, with the R&D claim actually being included within the corporation tax, or we complete the R&D claim separately and advise you and your accountants as to how to complete the claim in terms of the CT 600. So a number of different ways that you can claim the R&D credit. You can either claim it as a cash rebate from HMRC or a corporation tax saving. So the cash rebate is essentially slightly restricted, but it's more so if your company does need that cash injection immediately. And it's essentially just a refund from HMRC. But as I mentioned, it is slightly restrictive in terms of how much you can receive back from HMRC, as opposed to actually offsetting it against the corporation tax. So, for example, a loss relief company. So if you have a loss-making company, essentially what that loss-making company would find is that they need the cash injection now. And a lot of those companies tend to apply for a cash rebate. I mean, Adam, I assume that's the same in terms of the examples that you've gone through.
Yeah, absolutely. I mean, again, what we're having a lot of conversations with people about at the moment is that we've done their claim, we work out what the saving is or cash rebate, and then we're trying to help our clients with a bit of forecasting to say, right, well, you know, maybe over COVID you were making a loss, but if you think you're going to be making a profit in the next 12 months, it may be better to not take the cash and roll it forward to offset against your future profits, because that's far better from a P&L perspective. But some clients say, you know what, I'm happy to take a lesser amount in cash. I've got it in the bank and, you know, it's all good. I think that what we're seeing at the moment is certainly because of the economy and everything that's going on at the moment, we're finding a lot of companies would prefer to take the cash, get it in the bank, although it's a little bit reduced, you know, they much prefer to just have the cash and they know it's there, rather than you know, rolling it forward. But it depends, and we help our clients as part of this process do that analysis and say, right, well, if you were to take it as cash, you'd get this, but if you were to roll it forward and make a profit, then it's going to be this. And you know, we work with our clients to make sure that they get the best outcome they can, you know, based on their current and you know, prospective situation.
Yeah, so we do a lot of corporation tax planning with our clients when it comes to R&D, and a lot of the time we do ask clients what their future projections do look like, or what their current financial year does look like in terms of the corporation tax. So it might also be better just to roll that R&D tax credit forward to offset it against any future profits that your company may be making. Likewise, you can also do the mix and match method, whereby you offset the R&D against some of your corporation tax and essentially creating a corporation tax loss, and then the loss then creates a rebate from HMRC. So there are different ways in which you can do your tax planning when it comes to corporation tax. At the moment, what we're finding is that a typical claim with HMRC, and I know that's quite a broad timeline there, takes between 4 to 12 weeks. That's purely because HMRC is so snowed under with the backlogs in terms of current R&D claims. They are pushing R&D at the moment, but because of the new legislation, they're looking at R&D as an area whereby they need to look at claims on an individual basis. So we're finding that we're advising clients on a 4 to 12 week wait from HMRC.
Okay, so why Fusion? This one's fairly simple, I think. So as I've said a couple of times, I've got to stop saying it. We do have currently 100% success rate, and we've been involved in around £25 million worth of claims. Where we're slightly different to a lot of other companies is we offer the technical and the financial elements of the claim all under one roof. Now, historically, before these changes that are coming in April, a lot of our competitors were not doing a very detailed technical narrative. However, now it is a mandatory requirement to do that from the 1st of April. And I think that sets us apart from a lot of our competitors. Venetia's team and my team work very closely together, making sure that the technical and the financial elements hang together properly. And we do that all in one report. And as it says there, all of that work is included within our fixed fee. We also provide full end-to-end service. I mentioned before, we've now got a insurance policy that covers any of our time in the event that HMRC were to start an inquiry into your claim. Our fees as a result of that would now be covered by our insurance. So there are no additional costs. It is a completely fixed fee, and it's completely capped. That's the fee, and there's no surprises or anything else. We've put there, on average, our clients receive back around £25,000. Some have been far greater. The biggest claim we did, I think it was for about 1.7 million. That went through, which was very good news. But we've also been involved in claims of, £10,000, £15,000 and everything in between. So, on average, they're about £25,000. And certainly, with things as they are at the moment, with the recession and all the bad news in the papers, it's a great situation to be able to use the, this area of tax to your advantage and get back money through the scheme, which is what it's designed to do. So, very, very happy to promote this type of service, because I think that a lot of our clients and people that we speak to on a day-to-day basis are not aware of it, or have maybe not claimed what they should have claimed. So, we're really happy to be able to offer this as a service, and it's something that we're very good at.
I think just underneath that red text there, so any any consultations are free of charge. So we don't charge any leads or clients for a consultation with us. And as Adam mentioned, we go through the start of that process with you to see if you actually do have an R&D claim or costs relating to R&D. So if you do want to start that process or do want to reach out to us for accountancy services or R&D services, my email address is just there. So do reach out to us if you have any questions.
Good. Okay, Q&A time. So I've seen popping up on the right-hand side some questions, which is great. So let's try and tackle these. Okay, so the first question in fact, just before I start reading these out, I will just say that, we'll answer what we can. However, there's still a lot of guidance that HMRC haven't actually released yet. So if there's anything that we can't answer today, then we'll be in touch the minute that they've released the formal legislation. We'll be in touch and happy to answer any of those then. So, okay, first question. Does the UK mean UK mainland, or does it include UK overseas territories? Great question. Don't know the answer to that one. We'll find out for you. Thanks so much for raising that. We'll find out and we'll be in touch. Next question. Does the 6 months requirement apply to each year's claim or just the first one? So again, very good question. Our understanding is that it is for every claim. Again, they haven't released the kind of formal legislation yet, so we can't be sure until that's released. But our understanding is that at the end of every accounting period, you have to notify HMRC within 6 months that you will be looking to make an R&D claim. That is the current understanding of it. So again, if that changes, we'll be back in touch. But that's our understanding of it at the moment.
I think that's more just to make HMRC aware that your company's planning to make an R&D claim, and if they need to appoint any sort of officer or case handler to the R&D claim, just to ensure that everything's all in place, that gives them notification that an R&D claim is actually coming their way.
Just on that point, Venetia, do you want to just maybe explain? So when you go and do an R&D claim retrospectively, do you want to just explain about the whole adjustment of the CT600?
Yeah, so a retrospective claim, so you can go back to accounting periods. So even if you're doing a current claim in, 2022, you can go back to 2021. But again, you must notify HMRC that this is what you're doing, or this is what you intend to do. And when you go back retrospectively, essentially you look at the R&D costs from day one or day when you started the R&D. And we'd essentially do a 2-year claim for you. And again, what we do is we try and maximise that claim as much as possible in terms of carry forwards and carry backs. And it's just looking at the 2 years worth of costs fully. I mean, just in terms of the new rates, if your accountancy period or accounting period does end or start mid-year, so for example, if your accountancy period is 31st December 2023, what HMRC have guided is that you must ensure that you apportion the costs depending on what rates they fall under for the R&D costs. So, for example, with December, you'd have to essentially split the costs up until the 1st of April 2023 and do those costs under the old R&D rules, but any new costs within that year up until 31st December 2023 would be under the new rules, which kind of does make the R&D claims a lot more complex, which again means that it's probably best you do use an R&D expert who can actually maximise those claims for you and just ensure that the calculations are all correct.
Yeah. I mean, I think one of the things just to add there is that obviously what I think we mentioned in one of the slides, but probably could have explained it in a bit more detail, which we're happy to do, is that there are currently two types of R&D claim. There's the SME scheme and the large company scheme. Large company scheme is also called the RDEC scheme. Now, the rates that those are paid in terms of the calculation of how much you're able to claim, those are changing from the 1st of April. So at the moment, without getting too complicated, you're able to gross up the costs at the moment to 230% of an eligible R&D claim under the SME scheme. That's going to be changing to 186%. So it is not as great as it currently is from the 1st of April. However, leading on to the question that I'm going to read out in a second, what Venetia was just mentioning is that the claim amount, if it straddles the two periods, the two different rates, then there's a calculation that has to be made saying, right, this period was under this rate, this period was under the new rate, and then they have to all be merged together. So nice and complicated, but Venetia loves a bit of pure maths, so that'll be fine.
The accountant in me.
Yep. Okay, so let's read out the next question, which I think is related. So question 1, you state notification has to be made 6 months before the end of the period, but how would we know when the end of a project, how would we know when the end is of a project and research may go on for many months? Okay, so I think what you mean there is if, for example, let's say you had a calendar year, January to December, you would end your financial year in December, but let's say that the project ran from October onwards. In that year, you'd only be claiming October, November, December. So you'd make your notification to say, right, it's now December, I've been doing my R&D claim for the last 3 months. If you were then to do it again, so let's say you carried on doing R&D January, February, March, April, you wouldn't do that notification until the end of the following December. So that would still be fine because obviously it's an ongoing claim across 2 accounting periods. So that should be no problem.
Just also bear in mind in terms of R&D, it can be for ongoing projects as well. The R&D doesn't have to be completed. It can be something that's ongoing.
Yeah, it can cross multiple years. If we have an outsourcer abroad up to now, we can claim for it up to April, but if the work crosses over the 1st of April, then it would be best to pay for the work before the 1st of April. A website being designed abroad is difficult to split and suddenly gives the work to another company. Yeah, absolutely right. So, I mean, basically, you're not allowed to pay in advance. Well, you can, but you can't from an R&D. The R&D has to have taken place in the period. But, broadly, I think what you're saying there is that if you, let's say that it was a 3-month project that you started in March, so you were paying this outsourced company March, April, and May, then obviously the March invoice you'd be taking into the R&D claim, but the April and May invoice you wouldn't be taking into the R&D claim. Now, are people going to start changing outsource providers to meet the R&D requirements? Who knows? But the point is that you won't be able to claim for those costs from an offshore company post 1st of April. So you would, every business is going to have a different view on that, but those are the rules. So I suppose the point is that, yes, anything prior to the 1st of April, you'd be able to include. Anything after the 1st of April, if it's an offshore entity that's providing you the R&D, then you wouldn't be able to include that. Hope that answers the question. And then the last one here, what are the percentage R&D claims 2023 and pre-2023 rates? Okay, so it's complicated. There's a number of different things at play here. So, for example, at the moment, you would gross up 230% of eligible costs. So I think that broadly works out on a profit-making business about 24 pence in the pound of additional rebate. Now those rates are going down from the 1st of April, but there are a number of things that factor into that, whether you're loss-making, profit-making, whether it's in the large scheme, the kind of small company scheme. So it's always best to kind of get that calculated for you. We're very happy to do free, calculation of what we think it would be on the old rate and the new rate. Very, very happy to do that for anybody, no charge. We actually have a calculator on our website that shows the current pre-April rates. We're going to be amending that over the next couple of weeks to take into account the new calculations from the 1st of April, and it will show a little bit of a comparison. So more than happy for you guys to use that, or if you want to get in touch, we can run some very quick numbers for you and just give you a view very broadly about what we think the claim could be on both the old and the new scheme, if that is helpful. So that is good. We've got another couple of questions here. Is the presentation recorded? Yes, it is. You'll get a link after this, and you can watch that in your own time, no problem at all. We've got another question here. I thought that the 6 months only applied if a claim hadn't been made in the last 2 years. Has that changed? Everything is up in the air at the moment. They brought out draft legislation back in, I think, October, November time, and then they confirmed that a lot of those reforms were coming in April, but they haven't yet, given the full, the full final legislation on it. So everything's still a little bit up in the air. The minute we find out, we'll probably run another webinar to confirm exactly what the rules are. They're cutting it fine. It's the 24th of Jan, and it's coming in on the 1st of April. But they're probably worrying about tax and self-assessment at the moment till next week. But yeah, we'll do another webinar closer to the time and let you know as soon as the kind of formal legislation has come out.
I think at the moment it's probably prudent to just advise HMRC anyways. If there's no guidance at present, it's always best to just advise them.
Correct.
At least then you're keeping them in the loop.
Absolutely right. Absolutely right. Okay. Anyone got any other questions? We'll just give it a second in case anyone wants to add anything else. I can see someone typing. Okay, well, that's fine. We'll give it a second to see if it pops up. If not, we're very, very happy to have a free consultation with any of you today, and answer any further questions. R&D can get a little bit complicated, and so that's why we've been doing a lot of this for a very long time. We know what we're doing, and very, very happy to have a consultation and answer any further questions. So feel free to reach out. Our details are on the screen now. Phone numbers, email addresses. You'll get an email with a copy of the link. If you want to rewatch anything, that's no problem at all as well. But other than that, see, no other questions. That's good. But other than that, just want to say a big thank you for joining us today. Hope you found it informative. We'll be in touch as and when the legislation is all finalised, and probably do another webinar around that time. But just another big thank you. Thank you to Venetia for joining me today.
No worries.
And thank you, everybody, for joining. Any questions, please do get in touch, and we hope to see you on next webinar. Thanks very much.
Thanks, everyone.